You know, it's kind of wild when you think about it.
What's that?
How a shoe store owner and an English teacher
Yeah.
ended up
Oh, right.
like paving the way for the world's biggest asset manager.
I know, right?
That's the Larry Fink story, right?
Yes.
CEO of Blackrock.
Uh-huh.
His parents built a pretty sweet retirement nest egg through investing.
It's more than just a feel-good story, though.
Oh, yeah.
It's really core to Blackrock's whole mission, you know?
Fill me in.
Helping regular people reach that same level of financial security.
Especially now.
Right, especially with all the pressure on traditional retirement systems.
And this idea of giving everyday investors more power
Yeah,
really pops in Fink's 2024 letter to investors,
it does.
where he tackles some pretty massive
Oh, yeah.
challenges.
Big time.
We're talking about the future of retirement.
Huge.
In a world where people are living longer and longer,
Yep.
the crucial role of capital markets
Mm-hmm.
and the immense need for more and more infrastructure investment,
Especially in energy.
especially in energy.
So much to cover.
It's a lot, yeah.
And it's all connected in some really fascinating ways.
Okay, well, let's dive into Fink's world then
Let's do it.
and see what we can learn.
Sounds good.
Starting with this idea of
Yeah.
capital markets and how they impact economic growth.
All right.
Okay, so let me get this straight.
Sure.
Banks, I kind of get. Savings accounts, loans, that sort of thing.
Right.
But capital markets, that's where things get a little fuzzy for me.
Oh, yeah.
Could you give me the, like, ELI 5 version?
Okay, imagine like a giant marketplace
Got it.
where companies and governments can raise money
Okay,
by issuing stocks and bonds.
I'm with you.
It's a way to tap into like a way bigger pool of money
Right.
than just traditional bank loans.
Okay.
And it also lets regular people invest,
Yeah.
intentionally grow their wealth.
Okay.
So think of it almost like crowdfunding,
Oh,
but on a global scale.
gotcha. So instead of just going to banks,
Yeah.
companies can go straight to investors to raise the money they need.
Exactly.
Huh.
And the shift, from bank financing to capital markets,
Yeah,
it's been a huge driver of economic growth, especially in the U.S.
that makes sense.
Yeah.
But Fink also talks about this crisis in the 80s,
Uh-huh.
the savings and loan crisis,
Right.
and how it kind of shows how important strong capital markets really are.
It does.
How does that all fit in?
Okay, so back then,
Yeah,
most mortgages were held by these things called savings and loans.
I think I've heard of those.
Yeah, like those neighborhood places you see in old movies.
Right?
But they ran into trouble by making a lot of risky loans,
Oh.
and a ton of them ended up failing.
So are you saying that if capital markets hadn't been developing at the same time,
Yeah.
things could have been way worse?
Potentially, yeah.
Wow.
Because alongside that crisis, the mortgage securitization market was emerging.
Okay.
And that let banks bundle up these mortgages and sell them
Okay.
to investors as securities, which freed up their capital so they could keep making new loans,
Even with everything else going on.
even during all the chaos.
Hold on, back up for a sec.
Sure.
Mortgage securitization.
Yeah,
It rings a bell, but
it's a mouthful.
yeah, I don't think I fully get it.
Okay, think of it like this.
Okay.
Let's say you bake an amazing cake.
I like where this is going.
You could eat the whole thing yourself.
I mean, I could.
But let's say you cut it into slices
Okay.
and sell those slices to your friends.
Now we're talking.
Everyone gets to enjoy some cake, right?
Right.
And you make some money.
I see where you're going with this.
That's kind of what mortgage securitization does.
Okay.
Banks slice up their mortgages,
Yeah.
sell those pieces to investors.
Gotcha.
It spreads out the risk
Makes sense.
and frees up the bank's resources.
That's actually a really good analogy.
Thanks.
But didn't mortgage securitization also play a part in the 2008 crisis?
It did.
Okay.
That's a whole other deep dive.
We'll save that for another day.
Uh-huh. Yeah.
But what's important here is that Fink says the U.S. bounced back faster than other countries because of its strong capital markets.
Exactly.
So that flexibility, that access to all that capital
Yeah.
acted like a shock absorber.
Exactly.
So what he's saying is to really thrive,
Yeah.
countries need both a solid banking system
Mm-hmm.
and strong capital markets.
That's the key takeaway.
It's not either or.
It's both. They work together.
Interesting.
And Fink's not just talking theory here.
No.
He's seeing it play out in the real world, with Blackrock operating globally.
Right.
Places like Saudi Arabia,
Okay.
Japan, even India, they're all looking at the U.S. model
Huh.
and trying to grow their own capital markets.
So they see that as the key to.
They see it as essential for attracting investment,
Yeah.
fueling economic growth.
Pretty compelling argument.
It is.
Sounds like these countries are realizing
Yeah,
that just relying on traditional banks might be holding them back.
absolutely. Fink even tells this story about
What's that?
policymakers in India.
Okay.
And they're worried because their citizens, they'd rather invest in gold
Oh, interesting.
than assets that actually help the economy grow.
Wow.
It really highlights the potential here
Yeah.
for capital markets to drive growth in a more sustainable way.
So from a global perspective then,
Yeah.
strong capital markets are crucial
Absolutely crucial.
for both economic resilience and growth.
Couldn't have said it better myself.
But let's switch gears now
Okay.
and talk about that other big challenge Fink brings up.
Right.
This whole looming retirement crisis.
Let's do it.
Kind of ironic, isn't it?
What's that?
We're living longer, which is great, obviously.
Right.
But it's putting so much pressure
Yeah.
on traditional retirement system.
That's a paradox, for sure.
Social Security, pensions, all that.
Yeah, longer lifespans are amazing, right?
Totally.
Proof that healthcare and living standards are improving, but it also means needing more money to cover all those extra years.
Yeah.
And the systems we have, they were designed for people retiring earlier.
Right.
They're struggling to keep up.
It's like planning a road trip with enough gas for, like, 300 miles.
Okay.
And then suddenly you find out the destination is 500 miles away.
Haha, I like that.
You're in trouble.
Yeah, big trouble.
And to make things even tougher,
Oh, yeah.
almost half of Americans
I know, right?
between 55 and 65,
Yeah.
they have zero personal retirement savings.
It's pretty alarming.
Yeah, that statistic is scary.
It is.
This whole retirement crisis feels very real now.
Very real, very urgent.
So how does Fink suggest we tackle this?
Well, he breaks it down into 3 different perspectives.
Right, he mentioned that.
Looking at it from the macro level,
Okay.
the worker's perspective, and the retiree's perspective.
Trying to understand all the different angles.
Exactly. The systemic problems, the individual struggles, and the anxieties of folks already in retirement.
So let's start with the macro view.
All right.
What are the big picture things Fink's worried about?
Well, he points to those demographic shifts we were talking about.
Right, people living longer,
People living longer.
but the retirement age staying the same.
Exactly.
Like,
At 65, a concept from like a century ago.
Wow, it hasn't changed.
Not much, and it's putting a huge strain
Yeah.
on things like Social Security.
Right, which weren't built for this reality.
Nope, not at all.
So is he saying we should raise the retirement age?
He suggests thinking about it.
Yeah,
It's a tough one.
it would be controversial for sure.
For sure, it sparked debate,
Yeah,
but it's a conversation we gotta have.
I agree.
And it's not just about delaying retirement.
Oh,
It's also about giving people incentives
okay.
to work longer if they want to.
Interesting.
He uses Japan as an example.
What have they done?
They've had some success getting older folks more involved in the workforce.
So that would help ease the pressure
It would.
on retirement systems and let people build bigger nest eggs.
Exactly.
Okay, I see the logic there.
Yeah.
But what about the workers themselves? What are they up against?
Well, affordability is a big one.
Yeah, that makes sense.
A lot of people just don't have the extra cash,
Especially with everything getting more expensive.
especially with rising living costs. Yeah,
It's tough out there.
it is.
And then there's the whole investing thing.
Uh-huh.
It
Yeah.
can be so complicated
So overwhelming.
and intimidating if you're not a financial expert.
It's like trying to navigate a foreign country
I feel that.
with no map, no phrase book, nothing.
Lost in translation.
Exactly.
But how do we fix that?
Well, Blackrock's trying to tackle that complexity
How so?
with things like target date funds.
Oh, I've heard of those.
They make it easier, you
Yeah.
know. They tailor the portfolio based on when you plan to retire.
So it's like a set it and forget it kind of thing.
Sort of, yeah. But what about people who don't even have access
Oh, right, yeah.
to employer-sponsored plans?
Like gig workers.
Gig workers, independent contractors.
That's millions of people.
It's a huge gap in the system.
So what does Fink suggest for them?
He thinks we should look at Australia.
For what?
Their superannuation guarantee.
What's that?
Basically, it's a system where employers have to contribute
Oh,
to a retirement account for every worker,
really?
no matter what their employment status is.
So it's like mandatory retirement saving.
Exactly, for everyone.
Interesting idea.
It is, right.
Is anyone thinking about doing that here?
Actually, yeah, some states are trying out similar programs.
No kidding.
And Fink's also a big fan of auto-enrollment.
Oh, you mean like automatically enrolling people?
Yep, in retirement plans.
I could see that working.
Studies show it really boosts participation.
Takes away that first hurdle.
Exactly. No more deciding whether to sign up.
Right. It just happens.
It just happens.
Makes it easier for everyone.
it-
But even with auto-enrollment,
Yeah.
transferring those savings when you switch jobs
Oh, tell me about it.
can be a nightmare.
It's a pain.
I've been there.
I hear you, and Fink agrees.
Does he have a solution?
He wants to make 401k transfers way smoother.
Make it easier to move your money around.
Exactly. Less friction, less chance of losing savings.
So we've covered the macro view
We have.
and the worker's perspective.
Uh-huh.
But what about folks who are already retired?
The retirees.
What are their unique challenges?
Well, this is where it gets kind of surprising.
How so?
Fink says that a lot of retirees hesitate to spend their savings,
Even if they have enough?
even if they've got plenty.
That doesn't make sense.
It's not really about logic.
What is it about then?
It's more about psychology.
Okay.
And this shift in the retirement landscape we've been talking about.
You mean from pensions to 401ks?
Exactly.
Okay, I see.
See, with pensions, you had a guaranteed monthly check
For life.
for life, no matter what.
Yeah.
But with 401ks,
You're managing a lump sum.
you're on your own.
That's a lot of pressure.
It creates a lot of uncertainty.
Makes sense why people would be hesitant to spend,
They're worried about running out.
especially with people living longer.
Exactly. It's a real fear.
So what's the solution?
Well, Blackrock has this thing called the Life Path Paycheck Strategy.
Life path paycheck.
It's kind of interesting.
Tell me more.
They're trying to combine the best of both worlds.
Right.
The flexibility of a 401k
Yeah.
with the predictability of a pension.
So you get regular payouts,
Regular, customized payouts.
based on your specific needs.
That's the idea.
That's pretty cool.
It is, right? Gives retirees more confidence.
Lets them actually enjoy their savings.
Exactly. Without that constant fear of running out.
Yeah, retirement should be about enjoying life,
Totally agree.
not stressing about money.
Absolutely.
But Fink also talks about this massive need
Yeah.
for investment in infrastructure,
Huge need.
especially in energy.
Especially in energy, yeah.
And this is where those capital markets come back in.
They do big time.
Think about it. Roads, bridges,
Airports,
energy grids.
the whole shebang.
The world needs so much new infrastructure,
A ton.
especially as developing countries grow.
Uh-huh.
And developed countries have to modernize.
And transition to cleaner energy, of course.
That's not going to be cheap.
Not at all.
We're talking trillions of dollars.
Trillions globally.
Wow.
It's a lot.
Where is all that money going to come from?
Mm.
Trillions globally. I mean, governments can't be expected to pay for all that, right?
That's Fink's argument, exactly.
What-
This traditional way of funding infrastructure, mostly through governments,
Yeah.
it's just not going to work anymore.
Especially with all the debt out there.
Especially with rising global debt, yeah.
Makes sense.
He thinks public-private partnerships are a big part of the solution.
Public-private partnerships.
Yep.
That sounds promising, but
Yeah.
I don't really get how they work.
Oh.
Could you give me an example or something?
Sure. Think about Gatwick Airport
Gatwick.
in London. It used to be like the second-rate airport, you know?
Compared to Heathrow.
Exactly. But then this private equity firm came in,
Okay.
Global Infrastructure Partners. They're called GIP.
GIP.
They basically gave Gatwick a complete makeover.
What do they do?
They expanded the runways, made security better,
Wow.
and they even focused on customer service.
Customer service at an airport. That's almost unheard of.
I know, right?
But seriously, that sounds like a win-win.
It is.
Investors make money, and the public gets better infrastructure.
Exactly.
So Gatwick is like a poster child.
It's a great example of what these partnerships can do.
Okay, that makes sense.
And Fink thinks this model is even more important in the U.S.
Because of our national debt.
Yeah, we got to find different ways to finance things.
Leverage private capital, you mean?
Exactly. Use it for public good.
But let's focus on one specific type of infrastructure for a second.
Okay.
Energy.
Big one.
Because that's where Fink sees the most need.
Definitely the most urgent, too.
Right, and we've already talked about the two main drivers there.
Yeah, transitioning to cleaner energy
Uh-huh.
and making sure energy is secure.
Which has become even more important after the war in Ukraine.
Absolutely. It's a tricky balancing act.
So basically,
Yeah.
we need to switch to more sustainable energy sources,
We do.
but we can't just abandon the old ones overnight.
Nope, not at all.
It's not like flipping a switch.
That's where energy pragmatism comes in.
Energy pragmatism. I like that.
It's a good term.
It's more realistic, you know,
It is. It acknowledges that we'll need both kinds of energy.
renewables and traditional sources
Exactly, at least for a while.
during this transition.
Exactly. It's about finding a practical path forward.
I get it. So what are some examples of how this is actually happening?
Well, look at Germany.
Okay.
They're way ahead on renewable energy, right?
They are, yeah.
But even they know they still need things like natural gas.
For when the sun's not shining or the wind's not blowing.
Exactly. They need reliable backup.
Makes sense.
Then you've got Texas,
Okay.
going super fast.
Their grid is struggling to keep up right now.
Big time. They're adding more renewables, but
Mhm.
they're also realizing they need more reliable power sources, too.
To avoid those blackouts they've been having.
Exactly. It's all about balance.
Meeting the needs of today while preparing for tomorrow.
It's tough.
So where does Blackrock fit into all this?
Well, they're putting their money where their mouth is, investing in all kinds of energy transition technologies.
Like what?
Solar projects in Southeast Asia, wind farms in Africa,
Okay.
even some pretty cutting-edge stuff.
What do you mean?
Thermal battery tech, it can store renewable energy for later use.
Wow.
And they're even investing in carbon capture.
Carbon capture? That's like sci-fi stuff.
I know, right?
Sounds like they're trying to cover all the bases.
They are, but it's important to remember.
What's that?
BlackRock's not trying to pick winners and losers here.
No.
They're investing in a bunch of different strategies
Okay.
that line up with what their clients want.
Which includes both traditional and renewable energy.
Exactly. It's about navigating a really complex situation.
This has been a really fascinating deep dive.
It has, hasn't it?
We've covered so much.
Capital markets, retirement, infrastructure, energy.
Yeah, it's clear that Larry Fink sees all these things as connected.
He does.
And he's not shying away from proposing big solutions.
Nope, not at all.
And I think it all comes back to that story about his parents.
That's right. Their retirement.
That sense of hope.
Of opportunity.
That's what Fink is trying to create.
He is. He's worried about all the pessimism out there.
Yeah, especially among young people.
And the lack of trust in institutions.
He was pretty blunt about that in his letter.
It was a wake-up call for sure.
It was. So it all boils down to this question he asks.
What's that?
How do we build a more hopeful and inclusive future?
A future where everyone has a shot.
At participating in economic growth.
At reaching financial security.
It's a huge question.
It is.
And there are no easy answers.
Yep.
But it's a question worth asking.
For sure.
And one that we all have a part in answering.
We do.
So that's it for this deep dive. But as always,
Yeah.
the conversation doesn't end here.
Keep it going.
Keep exploring these issues. Keep asking questions.
Keep learning.
We'll see you next time.